Hi friends, in this session today I am going to talk about residential mortgage loan and its features. So let's first see what is residential mortgage. It is a kind of loan where the collateral that the borrowers keeps as mortgage is basically a real estate property. So when the borrowers defaults on his loan, then what the lender does, it receives the collateral and then recovers its money. That is the residential mortgage loan. Here one of the key aspect of the loan is the loan to value ratio. Now what is loan to value ratio? Loan to value ratio is the loan amount that is being borrowed by the borrower, and value is the value of the collateral. Okay, that represents the loan to value. Now when the loan to value amount decreases, that is when the ratio of the loan to value is lower, then it stands as an advantage to the lender, because this happens when the value of the collateral is on a higher side than the loan amount. So when the borrower defaults, then the lender sells the collateral and recovers its money. Okay, so now we will go to see the features, the key features of the residential mortgage loan. First comes the maturity. This residential mortgage loans basically ranges the maturity period ranges from 10 years to 20, 30, 40 years, like that. Okay, now we will see the interest rate. Okay, interest rate is like for this residential mortgage loan are fixed rate interest, that is the borrower will pay a fixed rate of interest throughout the tenure of the loan. Also it might be of variable or adjustable rate, that is the interest rate varies across the tenure of the loan. Also it can be it can be index linked rate, that is the rate of the interest will be dependent on the market rate, that is a reference rate, which is basically the LIBOR rate. Okay, now also the interest rate can be a convertible rate. What is convertible rate? Because for the initial period the borrower will pay either a fixed or variable rate. However, after certain time, the borrower will opt for either fixed or variable rate, like depending on its depending upon its choice. So that is called the convertible rate. Okay, also the interest rate can be hybrid. Hybrid basically means the mix of both fixed and variable rate. Okay, so these are the interest rate type that comes under residential mortgage loan. Now we will see the principal payment. Okay, principal, it is like a principal, as we have already seen in the before session, that principal can be paid either in balloon payment way or partial amortizing way or fully amortizing way. Like in what happens in balloon payment, what happens, the interest amount will be paid periodically, like yearly or half yearly, and the principal amount will be paid at the end of the tenure or at the maturity, so which is called the balloon payment. Now we will see the partial amortizing loan. What happens here, along with the interest amount, certain principal amount will also be paid periodically, and it will be paid every year, and at the maturity a bigger amount of principal amount plus interest will be paid and the loan will be settled. That is partial amortizing loan. Okay, and in the fully amortizing loan, what happens, along with interest amount, certain amount of principal will be paid. Like generally it is seen, it will be equal amount of principal will be paid over the tenure of the loan. So as when the maturity arrives, there will be no principal left and the loan will be recovered easily and gets settled. Okay, so that is the principal way of that is the fully amortizing way of loan repayment. Now we will see the prepayment. some loans also get prepaid. That is, the payment happens before even maturity comes. So it comes basically for two reasons. Suppose a borrower which has borrowed the loan from the bank, okay, at a certain interest rate. Suppose he found out that there is loan available at a even cheaper interest rate. So what it does, he gets the loan from the at the cheaper rate, and it's gives that amount here and repays the loan and gets the loan closed on before the date. So it is prepayment of the loan. Also, what it can do, suppose it had purchased a house, and suppose it like sold the house, okay, to another party. So it got the amount, and it gave the amount to the bank and closed the loan on a before date. In that way also it can be prepaid. So but it comes with a penalty, that is called prepayment penalty rate. Okay, now we will see foreclosure, like non-recourse loan. What happens in non-recourse loan is that, suppose a borrower has taken some amount from the lender by keeping collateral as mortgage. However, the value of the collateral has reduced as compared to the loan amount. Okay, and the lender do not have any claim on any asset apart from the collateral. So here the borrower becomes a strategic defaulter, and the loan is called a non-recourse loan. Okay, and but when the lender has a claim on other assets as well, then it can recover its loan, and so that is called a recourse loan. Okay, so these all are the features of the residential mortgage loan. In the next session we will see the cash flow and the credit risk associated with residential mortgage loan. Thank you very much friends for watching this video.